Good morning, good afternoon, good evening to everyone. Welcome to our session on Financial Inclusion Week. Our session is Saving Linked Insurance, Protection Against Small Shocks, and Incentives for Long-Term Savings. My name is Satara Merchant. I'll be the moderator of this session. I am the CEO of a Swiss Capacity Building Facility, also known as SCBF. We are a technical assistance facility that funds much needed technical assistance to the financial sector partners to develop innovative financial products and services for low-income populations, particularly for women. As you all know, financial services such as payments, savings, accounts, and credit are the cornerstones to development. Over the last decade or so, the worldwide account ownership has reached 76% globally and 71% in adults in developing economies. Despite these advances, there are two gaps that continue to be there. The first gap is the underserved population. So women, poor, those that are less educated, these populations have been left behind. For example, the gender gap account ownership across emerging economies has fallen to 6%, from 9%, where it hovered for many years. The protection gap, which is where populations can be resilient in the face of a shock, has also remained at 95%. So more than 95% of the population is not covered. And so what we are doing today here is we're going to talk to FSD Africa, Women's World Banking, and Vision Fund, and to hear what they're doing to close these protection gaps. I will like to take this time to introduce our panelists. We have Elias. Elias is the Senior Manager, Risk and Regulation. We have Solène, who is the Global Insurance Director with Vision Fund. We have Frank, who is also with Vision Fund, but in Ghana, he's the CEO there. And we have Gilles, who is the Insurance Director with Women's World Banking. Would like to start with Elias. Elias, if you could share with us your insights on how you've seen the sector evolve. You've been exposed to many different types of insurance models. You have been following the insurance space and seeing how insurance and building resilience in low-income populations have been taking place. So if you could share with us your insights.
Yeah, thank you very much, Sitar, and it's great to be here, and we are happy to really be part of this discussion. We are basically facing a very difficult time at the moment because there are a number of risks that various communities and businesses are currently experiencing. But I just want us just to go through a bit of statistics, just to kind of lay a ground on where we are within the globe. And ideally, you did mention a number of issues at the opening remarks, particularly indicating that there's still a big exposure to women, a big exposure to communities, particularly those particular communities come at the low end of the pyramid. And that basically, if you look at how the world has kind of been trying to provide attention to these particular risks, you'll see that there are a certain trend in terms of microinsurance that various companies and also communities have been trying to see how best it will able to help in terms of building resilience amongst the communities. So I want just to kind of give a bit of statistics on what is currently happening within the global microinsurance space. And we've seen close to 704 products being developed across 30 countries. And this is within Africa, Asia, Latin America, and the Caribbean. And that basically lays ground that there's a lot of traction towards creating solutions that are going to support these particular communities and kind of build resilience within these communities. Over and above that, we've seen close to around 1.1 billion in microinsurance premiums. And this indicates about 6% of the estimated potential market. Now, this is just an indication that there's a bit of work that has been done in this particular space in terms of building resilience within the communities, but there's still a lot that needs to be done because we have kind of managed only to have an impact of around 6%. Over and above that, we've seen around between 179 to around 377 million people covered by around 90 million policies. Now, this basically indicates that it's not only by providing protection to the sum insured, but this extends to the dependents. So you will be able to see that out of around 90 million policies, the resilience has been created between 179 to 377 million people. Now, over that, then we can be able to see that across the region, there's a lot of work that has been done in parts of Asia, which basically stands at 7.7 billion in terms of microinsurance market target, in terms of the estimated value. We've seen a lot of also work being done in Africa, which basically, if you look at the proportionality in terms of the estimated microinsurance market value captured, currently Africa stands at around 11%. That means that there's still a lot of work that needs to be done with other continents, but we've seen a lot of traction in Africa. But that is not enough, because if you look at what is the needed value and the needed scope of microinsurance, this can go even beyond to around 300 million that still needs to be tackled in Africa. Just to continue to the next slide, we can look at the different products and different risks that have been covered over time, and health stands at the top of the pack because if you look at the health infrastructure within various parts of the continent, particularly in Africa and Asia, there's still a little bit of work that needs to be done, and then that basically means that there's a lot of solutions that can be developed around health products, and this is a very simple health solution, such as hospital cash that enables the communities to get some money to get them to hospital and get some quick treatments in case they fall sick. We've seen also innovators and insurtechs coming into this particular space, trying just to provide solutions that kind of target short-term illnesses on predominant diseases such as malaria that is very dominant in parts of Africa. But also, if you kind of look at what is happening in other parts of the continent and on the globe, then health basically stands at the top of the pyramid. Then over time, we've seen climate being a very important issue to be resolved across the globe. And over this, we've seen an adoption of agri insurance products, particularly to the smallholder farmers within the globe. Then if you look at how then the distribution is happening, over time, there's a lot of distribution across agencies and financial institutions, and this kind of brings into space that these particular communities are using different channels in terms of enabling these solutions to be taken within the market. So this kind of gives us a gist of what is happening and distribution channels and risks that have been covered across the microinsurance value chain. Maybe if you can go to the next slide, and we can see then what would typically mean or what basically will create impact across these particular communities. So if you look at what we basically term as a theory of change, and what you can have in mind in this particular case is a smallholder farmer that really looks into building towards inclusion and food security. So we want these particular persons to be financially included. We want them to support in terms of addressing the issues of food and security. within various parts of the globe. Then if you look at that particular journey, it must be quite strategic in terms of how then these particular solutions need to be created. So if you are thinking about a savings bundled insurance, agriculture insurance, then the first component is that what is the channel of distribution? We've seen mobile insurance being one of the critical components of distribution or to various communities that are dealing with agri-insurance. And this means that there is need to provide to them access to credit and or some form of financing, which basically means that how then are they able to get the quality seeds and quality outputs in terms of what they want to take to the farm. There's need for protection against insurance risks, which basically rise out of weather. So we can see that this particular smallholder farmers are given some form of insurance. It can be index-based, it can be peril-based kind of instruments. But over time, then there's need to look at how do they get mechanization. So which basically improve in terms of the output that they're going to produce. And over time, then if they are going to produce these particular crops and harvest, then they need to have access to ready markets for these particular types of produce. Then that will, in one or the other, lead them to get some form of savings, which lead them to inclusion and food security. So in terms of this theory of change, you will be able to see that insurance might not be provided as a standalone solution because as we kind of build towards inclusion and towards food security, then there are different components that needs to be brought into the value system. So there's real challenge that needs to be addressed, and this real challenge can only be addressed by providing a bundle that really addresses some of the exposures that these particular smaller farmers are facing within various parts of the globe. Maybe if you can go to the next slide. Then what comes in mind is that we need to kind of create some enabling in terms of innovation, because innovation plays a very critical component towards supporting the theory of change that I've indicated earlier, and also basically enabling a more resilient outlook within the market ecosystem. So in this particular case, then there are different components that we can basically bring into play. So for instance, there's need to build a strong talent pipeline, and we've seen various programs currently being created across the globe. We have close to 19 well-known insurtech accelerators and incubators. And in this, they're just looking into how then do we spur innovation and kind of enable innovative startup get into this particular play. We need to have innovative, inclusive solutions to address the challenges that are facing various communities, but also people within the insurance value chain. And I'll give an example. We've been working with SCBF to really manage a very innovative accelerator program, Malawi, whereby there's a lot of traction towards building resilience within various communities in Africa. Over time, then you can also tap into market engagement enablers, which basically means that there's need to provide literacy and also to enable these particular communities to be ready to take up these innovations. And this basically means that there's need to create an availability of appropriate and ready aggregators and distribution partners. There's need to look at how then we plug into the tech partners and other underwriting partners. And in that then, by enabling a proper engagement, then it kind of brings a very good platform that will provide financial literacy to these particular persons that are highly exposed within our communities, and also the businesses that are highly exposed within various industries. And in that, then we've seen across around 33% of adults worldwide are currently financially literate. That means that we need to still do some work around literacy. Access to finance has been a major issue, and basically, if you look at it from the front of view, whereby innovators within development cycle might need to access this particular financial, some form of financial assistance. Over time, we've seen across the globe around 19.8 billion are being raised within capital, particularly in the year 2021. That means that there's provision of financing, but this still need to be done within the lowest point of the pyramid, whereby how then do we also enable various startups and even incubators to reach out to those particular last mile communities and businesses that are highly exposed to a number of risks. Underlying infrastructure is quite a key issue that needs also to be looked at. We've seen over 80%, particularly access to mobile phones in developing countries. Over and above that, they still need to push for market efficiency, including providing access to electricity and enabling adequately priced digital connectivity. So it's not only by providing access to mobile phones, but what is the cost of digital connectivity that will basically ensure that the prices of these particular products are maintained at a very affordable rates. We've seen also various countries coming up with a test and learn environment. And in this case, then it enables innovators to provide solutions that do resonate to the needs of these communities that we are trying to build resilience across. So over 73 unique fintech sandboxes have been developed in over 57 countries across the world. That basically means that there's traction in terms of enabling these particular environments to support more need-based solutions over the next couple of years. Just to conclude on this is that we also need to continually support various entrants within this particular ecosystem in terms of providing guidance and enabling them to see how they can play into the space. So in this case, then how then do we license, how then do we authorize different players within the resilience ecosystem? And that gives us an opportunity just to ensure that there is some form of clarity in terms of what the do and don'ts within the ecosystem. That will also enable us address some of the emerging risks within this particular space, particularly when we are building resilience across the communities. Maybe if you can go to the next slide. Just to then look at what key issues that might arise. And the key issue, particularly when we are looking at those particular persons that are highly in one or the other excluded, would be issues pertaining consumer protection. Now, these are persons that are heavily exposed to a number of risks, and it basically means that they need to be well protected across the value chain. So customers are not looking at the financial value of the products that they are receiving, but also in extent they're looking at the experiential value, and the experience that they get out of consumption of these particular products will highly be dependent on the consumer protection issues. So we've seen that innovation has been instrumental in increasing penetration of insurance within this particular ecosystem, but we also need to kind of enable these particular communities be well protected within this particular value chain. So in this particular case, then you'll be able to see that regulators have been trying to promote market development by involving various players on the ecosystem, but at the same time ensuring that there is protection because these particular innovations can pose a number of risks to the consumers of these particular products. At the same time, it can bring in what we call regulatory gaps that in one or the other might harm the consumers. And what we've seen more globally is that there's need to tighten the grip of how then consumers are protected, particularly on cyber issues that might arise out of the of innovation, but also just to ensure that the data is well protected across the ecosystem. Maybe to conclude is that we are basically looking into ensuring that as we build in a very innovative ecosystem that will address some of these particular risks that are highly being experienced by communities that are heavily exposed to a number of risks. These risks might range from issues that might arise out of issues of climate change, and also issues around enabling them to ensure that they are well protected and to protect them from out-of-pocket expenses. Then it means that innovation is key and enabling the system across the value chain that will ensure that the products do meet their needs, but at the same time, the risks that they might be exposed to are well taken care of. We've seen a number of examples of these particular products being currently experienced in Africa. So for instance, I can give an example of a solution that looks into people paying for premiums using waste materials. So for instance, plastic bottles is weighed in Nigeria, and that basically is used as a component of payment of premium, and that particular payment is kind of divided whereby you pay premium for your health insurance. There's some form of saving whereby the proportion of the amount of waste and plastic bottles you've collected is used as a saving, which basically means that there's a saving linkage over than just providing protection, that there is a savings component that really enables those particular communities to be more financially included, but also ensure that they are well protected against a number of risks that are exposed to. I'll basically end at that, and maybe I'll pass it back to Sitara. Thank you.
Thank you, Elias. Lovely to hear that there has been an evolution. We're not stuck in the dark ages with life insurance products. We've moved quite far ahead with health insurance taking the lead, or health products taking the lead. It's interesting to also see how, your comment on the theory of change being, I think there's more and more realization that we need bundled products. It can't just be standalone products. I think the innovation, so you've got to tie in the innovation, taking in digital financial services and the market, the regulation, all of these different components that you mentioned. I think what's interesting also to sort of summarize is to say that really there's lots been done, but lots more need to be done. And I think on that note, I'd like to invite Salem. So thank you, Elias. And I'd like to invite Salem and Frank to tell us about the work that they've been doing in their Hospicash product. So over to you, Salem.
Thank you, Sitara. So maybe to start with, a few words on World Vision and Vision Fund. So World Vision is an international NGO present in 98 countries, and World Vision International long-term development work is really focused on enhancing the lives of children through the child health, livelihoods, education, disaster response, WASH, and child protection, as you can see on the screen. Vision Fund International is the microfinance arm of World Vision, and we have 28 MFI. So VFI is the network of these 28 MFI in 28 countries. We have a portfolio over 500 million, lending to around 1 million clients globally. In this program that with Frank, our CEO of Vision Fund Ghana, in this program that we will present just now, this is really to see how Vision Fund can protect and how we can distribute this insurance product to World Vision beneficiaries. At Vision Fund, we are quite used to work with insurance. We started insurance like 7 years ago on, of course, credit life because we are an MFI, but on some other products like crop, livestock, health, Hospicash. And now we really wanted to go beyond our MFI and to see how we can serve the families and the beneficiaries of World Vision. World Vision beneficiaries are not familiar with any financial tool, with any financial product. It's very new to them, and they are also not very educated on insurance and micro-insurance. Our borrowers are not completely knowledgeable on insurance, but World Vision beneficiaries are a bit lower income people and with a lower education, at least on insurance. They also don't have any process adapted to implement any financial tools. So it was all this journey that we took along with our MFI in Ghana and in Malawi to see how we can serve them. Why we are doing this and why health insurance is important to World Vision and Vision Fund. We started with two different statistics, global statistics. From the WHO, we know that 100 million people are pushed into extreme poverty each year, having to fund their own health cost. We looked at an internal study from World Vision, and we see that 30 million children are in danger from secondary health impacts. We wanted to better understand what our families are saying about it. So we conducted some needs assessment survey in 10 countries, but in the next slide, you will see more the result of Ghana and Malawi that we are talking about today. And this need assessment is really to better understand what are the risks that people are facing, how do they prevent this risk, how do they cope with the risk, what are their health habits, but also what is their understanding on insurance and their willingness to pay for a premium in order to be covered for the financial consequences of the risk happening. What we realize is that illness is the most frequent risk and the most impacting financially risk in the families, even in countries where there is a national scheme in place, national health insurance scheme in place, like you see on the screen, Malawi, Ghana, and Tanzania. On the next slide, please, you will see some more detail on the needs assessment in Ghana and in Malawi. So this has been conducted in 2021, and what is really what we can really highlight is for example, in Malawi, 90% rank illness as the first risk. We can see also the experience of illness in the previous 12 months. We see 88% of households in Ghana, 89% in Malawi. This is already tangible. And also the understanding is not that bad, 77, 98%. So they know about insurance, and people willing to join, 61% in Ghana, 70% in Malawi. In the next slide, you will see the product that we designed from this. And I just give you only some figures, but we came to know that the product that we would need would be a hospicash product that can be plugged along with the national scheme. We will cover the medical bill, but we know that on an hospitalization, it's only 50 to 60% that are related to the medical treatment, and the rest is like transportation, medicine, or loss of income when people are hospitalized. So that's why we started working on a hospicash product, and you can see the two products that we have here on the screen: in Ghana with Alliance and in Malawi with microinsure through CIC. You see the level of premiums are very different. The benefits are, in the two cases, death, disability, and hospitalization. So these are the products that we implemented. And before looking at the challenges and also the successes that we had on this implementation with Frank, let me give you some results that we reached so far. So we have so far 26,000 people trained, because along with the product, we provide some education module first on the concept of insurance, and I will show that in a minute, and also on some health tips like women's health or malaria. So people are trained on those matters. We issued 2,817 policies covering 10,000 people, and 52% are children, 48% are female. Next slide, please, because we think that the product can be good, but people need to understand the concept first. And this is an example of an educational tool that we designed in Malawi. Of course, we have that in local language, but here we put the English translation. And then, Frank, you can take over to present the challenges and the successes that we saw on this project. Thank you. Sitara, we don't have the sound.
Their lives. Unfortunately, life being unpredictable, floods fell upon the entire village. Many crops were damaged, people were injured, and unfortunately, lives were lost. What can one do in such a moment? Well, fortunately for the Maseko family, they were insured and were able to recover from losses of the yield. Their son that was injured was taken to a private hospital and was promptly attended to. They unfortunately lost their daughter to the same floods, but the insurance company was able to cover them through the funeral plan they subscribed to. On the other hand, Mr. Bengo had to borrow money and sell the remaining assets just to be able to meet the medical bills. Sadly, he lost his son, and unfortunately, he failed to pay for a coffin because he had exhausted all his resources. So, what is insurance? Imagine having different families contributing small amounts of money into one bag. This money can be given to any particular family if and when a problem arises. Insurance gives you peace of mind. Register now through the following lines: 0998 675 127 or 0884 627 623. Vision Fund, your partner in financial inclusion.
For that. And then so I will just want to share a few thoughts around what is happening in Ghana and then what we can do just to support the point that this is the best way to go. So in terms of the benefits or the opportunities that comes with insurance. If we can move to the next slide. Okay, so that's great, thanks. So we've noticed that with this particular project, as Solène shared, where we are using savings groups to introduce insurance, it has given us the opportunity to increase the level of impact that we are making by educating a number of people on insurance. So we have educated about 10,000 people on insurance. It has also helped us to deepen our impact by reaching the most vulnerable poor families through insurance, because this group, some of them are not ready for credit, but with savings, we are able to leverage on that and give them insurance. And that is also a very good thing that comes as a result of the opportunities that this product brings. It also gives us the opportunity to develop low-cost insurance product. As Solène has seen, as you saw, you realize that the premiums that comes with this product is very low, and a basic household can be able to afford. So that is also one thing that we are very much happy about. We also recognize that there are a lot of savings groups that are managed by World Vision, and also beyond that, we have other organizations also that have savings groups. So this presents an opportunity for us. If we want to use this as a conduit to reach more homes, we can be able to do that. And so those are some of the things that we have seen as far as the opportunities that this product presents is concerned. Having said that, however, it is also important to also share that it does not also mean that there are no challenges. There are a few challenges that we have also experienced this far as managing this product is concerned. The first one has to do with the normal hesitation that people normally bring when it comes to insurance, because there is a general perception that insurance companies give nice promises, but normally fail to deliver on the D-Day. So this is one challenge that we have experienced during this implementation. So what we have done, steps taken to mitigate this, is to build the trust of our clients. So we build the trust through intensive marketing and sharing of success stories, so that the video that you just saw is one of the tools that we use to ensure that we are able to propagate the message of insurance. And that will also help us bring more numbers in. We also use existing structures. So we are working with World Vision. It's a very potent way to enter communities where we go on the World Vision umbrella to let them know, because most of those communities have already had engagement with World Vision. So using that as a way to enter and send a message of insurance across is better. Also important is the community structures that we have. Almost all the communities that we have leaders that you can work with to ensure that you have a smooth entry into the communities to serve. We also notice that working on this, there are instances where you may face low sales at the initial stages. Low sales, and that comes as a result of the way we approach the work. So what we have noticed as a lesson when it comes to managing the sales is make sure that the time that you launch this project or product coincides with the availability of the individuals in the community, because you want to train them, you want to ensure that they are available to receive the message. So you need to watch their life cycles to look at when they can be available. A typical example is if you are doing this in a farming community and you decide to go into the community at the farming season where they spend most of the times in the field farming, you will not have them to come in and receive your message. So you need to make sure that your timing of the launch also coincides with the time that they will be available in the community. Also important is that you need to also ensure that it comes at a point where their cash flow will allow them to purchase the policies. So you have to also check on when they will be earning some money or incomes will be coming into their kitty, and that is when you should launch the product so that you are able to improve on your sales. Equally important is also about the staffing front. As a financial institution or as an institution that is marketing this product, you also need to develop incentive packages that will motivate your staff to be willing to sell the product so that you can increase your sales as well. So these are key lessons that we have learned as far as managing the low sales and also ensuring that you are able to improve on the integration. But apart from all this, we also want to also put on record that this has been very, very beneficial to Vision Fund Ghana and even World Vision Ghana, where we work in partnership, because it brought in a lot of immense benefit for us. First of all, it has given us the opportunity to build the capacity of our staff. So there's a general staff capacity building across insurance, the first one, and also how to cross-sell insurance products. And this is capacity building that we are very much happy about based on this product that we are looking at. So it is important that we also look at that as an advantage that others can also benefit from. The other point, which is also important, is that with this, it has helped us to develop good relationship with our insurance service provider, Alliance, as Solid mentioned earlier. We have worked together to understand our works better, and out of that, being able to even come out with a product that is very, very cheap or low cost, and then that our type of clients, as members of the savings group, can conveniently buy into. So that is also something that we are very much happy about. We also want to also mention that because of this, we have also seen the benefit of income diversification. So as a financial institution, bringing on board insurance gives you the opportunity to diversify your income source to the extent that now you can have some stream of income that comes from the commissions that you get from the sale of the insurance product, which is also a positive. Also important is that with this, you are also able to retain your clients, because the challenges that will come from payment for health needs and all those, which will affect repayments, are taken care of by the insurance, and then you are able to have a good repayment from your clients. And last but not least, is also the issues around integration. As Vision Fund Ghana, we are working with World Vision Ghana and working together to come out with this product, and World Vision going to the communities to introduce Vision Fund Ghana and we're working together to sell this, is also enhancing our integration. And I see this as something that all equally similarly minded organizations in all the countries can also look into. So if we have institutions that are engaged in savings group formation and the rest, they can partner with financial institutions, integrate, and make sure that we provide insurance services to savings groups, individuals, and try as much as possible to help reduce poverty and improve livelihoods. So this is a summary of the lessons that we have learned in Ghana that we wish to share in this call. Thank you very much.
Thank you, Frank. Thank you, Solange. It's lovely to hear organizations like Vision Fund looking at sort of going from right at the beginning where you've done a needs assessment, you're understanding what your client needs are, and then the client centricity of the product. So understanding that the product needs to be launched at a particular time of the season where there is cash, looking at all the components that really make a product like this successful. And we're really happy to partner with Vision Fund. What we'd like to do next, so thank you very much for that. We'd like to bring Gilles. Gilles is from Women's World Banking. And Gilles, if you could share with us the experience that your organization has had. Are you there, Gilles?
Yes. Can you hear me?
You can? We can't see you, but we can hear you.
Okay. All right. I should have the video running now.
Okay.
Okay. All right. Yes. So thanks for inviting me here, and thanks SCBF for the great support that you're giving us in terms of innovation. And we have two running projects with SCBF that are related to savings linked and savings bundled. Maybe I'll spend 3 sentences on who Women's World Banking is. We are in 31 countries, and basically we have 3 pillars. We work on advisory service, so creating products. We have an investment fund, which is a gender lens investment fund, and work also on training. Working with regulators and creating the field for women leaders to actually work on the segment of low income women. If you want to move to the next slide, I'll go very quick here. We have more than 10 years experience in developing insurance solutions. And we have 2 running. I mean, one is already completed, the one with micro fund for women in Jordan, but we have one running project in Uganda. As you see there, I have savings linked and savings bundled. I'll go to the detail there in a second. I think that when you think about the situation and the improvement, you can have the approach of looking at the glass of being half full or half empty. And I know that Elias was showing the great progress of insurance penetration. But at Women's World Banking, what we try to look at is also a measure of how many claims are being filed. And based on the research that you were sharing, Elias, I was checking. If you look at the health area, there is a small loss ratio overall of 12%. And if you take that as a measure of the value that the clients are getting, then we still have some work ahead. But that's nice to see that there is much more penetration of insurance and many more low-income people getting insurance. So I think that given the time we have, I'll probably concentrate on the 2 products that we have. But before I do that, Sitara, I wanted to kind of put in the context, and I'm thankful for Solange and Frank giving so many details on client research and what the needs are. Our approach on the savings linked is based on 2 observations. One is that when you ask low-income women about their financial pain points, health would come in the top 3, as well as the future of the children. You also have the business, but it comes slightly later. And so that's how we have focused mainly on health insurance in the past. Could you move to the next slide, Sitara? That's basically what I'm saying here about what the financial pressures are. But when you ask low-income women, their understanding of insurance is pretty limited. However, and if you want to go through the next slide and click through, we know that low-income people, and especially women, may not be familiar with insurance, but they try to cope with saving mechanisms. And so the work that we've done recently was to kind of shift our approach, which was mainly bringing health insurance bundled with a credit. So working with microfinance institutions and banks. And instead of bundling the product around a loan as a service, bringing it into the saving accounts. And the reason, I mean, we've seen very clearly during the COVID crisis that the credit portfolios of banks and microfinance in Africa, as an example, have been shrinking and getting very small. However, people try to save, and even in the crisis, saving is what they do to kind of cope with future emergencies. So we think there's a business case to actually tackle on the saving, and the theory of change that was mentioned by the colleagues before is to say that if you have savings and have insurance at the same time, you can actually protect your savings. And we know that if, looking at the prices that Solène was sharing, a person may be saving $1 a month, but it doesn't do a lot if they fall sick. But with $1 a month of insurance, you can actually get quite a bit. And so if you want to move to the last slide, not this one, the last one. I'm going to give you just a quick overview of the two projects that we've run and why we call them savings linked and savings bundled. On the left-hand side, you have what we call a saving linked product. That is a product that we developed with our partner Microfund for Women a few years ago. Interestingly, microfinance institutions in the Middle East and North Africa don't have the possibility to receive deposits. And so our logic there was to actually try to find a solution that would allow long-term saving, because the banks were expecting to have a very high starting balance, and so that was not working for those women. So, and the research showed that women would actually save. They would save in a kitty box, they would use groups, but they would be public knowledge. And when you have a kitty box, when you have a broken appliance and you need to replace it, then you go and get your kitty box. So the idea was to create a saving mechanism for the longer term. And that's how we developed that solution with Jordan Insurance Company, which is an endowment policy for 7 years. And one of the learning there is really the pricing, because when you create an insurance product that is meant to be a saving, you want to have a mechanism where people can actually collect the savings earlier without being penalized. So although the research was showing that women said they want to save in a safe place and not be tempted to have access to this money and would accept to be penalized, you still need to have a mechanism where they can access those funds. And because it's an insurance policy where you need to cover death, then the cost of the premium is higher at the beginning of the policy, of course. So that makes the financial equation very, very complex. So that's one product that has been running. We haven't been able to reach as much scale as we wanted. COVID has come in between. We can talk about the details and the reasons in the conversation later. And then if you allow me to spend maybe 1 more minute or 2 more minutes on the saving bundled insurance that we're currently running in Uganda. That product was based on the fact, and that's a paramount example, our partner there, Finance Trust Bank, had a relatively small loan portfolio of 20,000, 25,000 clients borrowing, but actually something like 500,000 clients who are saving on a regular basis. So the idea was to create a product that clients could use by bundling it to the account. We had that discussion about the financial education. We need to bear in mind that for the program to be sustainable, it needs to be commercially viable. So you need to make sure that you don't have too much anti-selection. And that's how we come with the solution of a bundled product. The research showed that a large or vast majority of the clients were interested in having a bundled solution, and that women were already saving in groups. So we could actually start by working on these specific women accounts, those with no fees and Mama Safe account, by bringing an insurance there. And I don't need to go too far into the details. It's a hospital cash product that we developed, but that comes as a bundled product. So it comes strictly as a service to that saving account. So as you see, these two products are linked or connected to savings, but have two different purposes. One being really about saving, but being an insurance, and the other one being an insurance that comes with a saving account. So in conclusion, what I would say in terms of the challenges that we faced and that we continue to face, but we're tackling them. One is the right price level. I was impressed to see the prices that Solène and Frank were able to reach, but it takes time. It takes a lot of energy working with insurers to actually get the right pricing. When you work with a bundled product, very often you have to work with organizations who are not in the core business of insurance. So you need to kind of create the capacity, and that takes time. When you move into the voluntary aspect of things, I mean, especially on the savings linked in Jordan that we have, you have to really think about the incentives because the agents will have to pitch the product, and then the whole financial equation gets changed if you give a share of the premium to the agent. So you have to really find clever ways. For example, contests or rewarding the best people in the sales force, rather than just giving a commission to the agents. And finally, I think the dedicated resources. I think really the commitment of the organization to sell these products is really paramount, and I guess that's something that is also driving the success that Vision Fund is having, and that we're trying to have with our partners. Is if the partner is convinced that insurance is a good addition to their products, then they will actually follow up with that. But that requires resources. You know, when a situation like COVID comes in, then priorities may be shifting, and so that makes things more difficult to actually reach scale. And I stop at that, Sitara, so that we can have a bit of time for the conversation and questions.
Thank you, Gilles. Thank you so much. Thank you, everyone, for Frank, Gilles, Solène, and Elias for your snippets. I think the point was to really get people excited and interested in what you've been doing, and hopefully they'll come back to you. And now we open up the floor for questions. We have our first question from Caroline Lucas. She says, I saw, for example, that Allianz was a partner. For many major insurers, the challenge of getting into microinsurance is making the business case. How are you able to facilitate this partnership? And what is the value case for major insurers? Sorry.
Let me answer this question maybe. So it was really how we split the responsibilities on Vision Fund International Insurance Team. We are here to support the countries, our 28 MFI, to implement insurance operations. So it's really our expertise to discuss with the local providers. We never take the risk on our balance sheet. We are always the intermediary, but we are here to try and to design further products to match with the expectation of our people and the capacity to pay of our people. Before joining VFI, I was the CEO of a microinsurance company in Asia, and I was on the other side, on the risk taker side. So talking with insurers and designing some products is something that we are used to, and I think, of course, this helps. But what is possible with Allianz in Ghana, for example, we will not be possible in some other country with some other partner, or even with alliance in some other countries. So again, it's really country by country that we can facilitate, we can negotiate on this partnership. What is the value case for insurers to go for micro insurance is really to acquire a volume of people insured, and of course to impact more and to be more known. We also know that these low income people becoming middle income people, and then they will also at some point they may increase their expectation in terms of risk covered, and they may go for individual insurance policies in the future. So this is just my personal view on that question.
Thank you, Solène. I think, Gilles, you wanted to respond as well on that comment.
So I wanted to say that in the last 10 years, what we've been doing is doing a tender. So really scanning the markets. So when you go to a new market, understanding what is the offer that you have, and then doing a tender with very precise details about the portfolio that you're looking at. What I have to say is that the learning after 10 years is we're still having the same conversations. You know, we are in the women segment. When you have a portfolio of 95% women, you can't really have that conversation with an insurer telling you you can't insure maternity. We have the data from our schemes, and fortunately, I must say that all the schemes that we've had are commercially viable. So we have some evidence about insurance companies being able to make some money there. But I would say it remains a very challenging environment because that segment is not really well understood. And also probably the insurance companies have a high administrative costs. So one of the solutions that we found, and I suppose that Vision Fund is also handling that in a similar way, is the claims filing. You know, if you're sitting with the microfinance distribution, then you have a way of facilitating some of the claims and actually speeding up the process, so reducing the costs of the insurance company. But I would say this remains one of the challenges in 2022. I wish there were more players who would really have the appetite to go into this segment.
Great. Gilles, there's another question for you. Which are the most successful and acceptable for customers? A, general purpose savings linked insurance, or B, a purpose specific savings linked insurance like child education or critical illness?
Yeah, I mean, I'm not sure the answer is, it's either A or B. I think that what we've done in Jordan is that the research showed that you had different personas depending on the age. Child education was very, very critical. When you look at women, and I mean, it's really, I've been in this business for 10 years and I see that again and again. So it's not a cliche. It comes again and again when you ask women. The future of the children is very important. So if you can bring a product that is appealing to them for the education of the children, this is going to be really, really important to them. The long-term saving, I think where the equation gets difficult is that when you save the equivalent of $10 in a month, even if you save for 7 years, you're not going very far, right? You're not going to buy a house with that, but you're building a certain habit, you're building data, you're building a case there. And so I would say there's no simple answer to that. I think that in the countries where you can have a saving account, it's probably going to be more efficient to have a saving account rather than a savings linked insurance, because the debate we were having about the price for a hospital cash is even worse for a savings linked insurance, with an endowment.
Great. I'd like to take this. We don't have any more questions. We have 2 minutes left for final remarks. I just want to say thank you to Gilles, for Solène, Frank, and Elias for your presentations, and thank you to the audience. You've been a super audience, and I hope this is useful. If you'd like to reach out to us, feel free to reach out to us either on LinkedIn, or I'm sure that the Financial Inclusion Week organizers would be happy to connect you with us if you'd like to get more information from us. Thank you again, and thank you to Financial Inclusion Week. Take care, everyone. Thank you.